This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Tuesday, September 17th, the day before the FOMC rate cuts. Lots to cover today, so just wanted to kind of take a pause and thank all of the new free and paid subscribers. Yesterday's podcast and show notes was very popular regarding the irrefutable 8 signs for stocks. Today, what I'm going to cover are all of the Dow 30 stocks in its entirety on the premium side of the podcast. Another thing I wanted to kind of bring up, if you all, any of you adhere or celebrate the Mid-Autumn Festival, today is that day. For those that don't know about this holiday, the Mid-Autumn Festival is also known as the Moon Festival or the Mooncake Festival. And it's celebrating basically the 15th day of the 8th month in the Chinese solar calendar. There is a full moon. So for those that do celebrate, have a great celebration. So let's cover breadth, and I want to also address yesterday's topic and the subject of what if those refutable signs are wrong. So taking a look at breadth today, we had another positive breadth session, 1,219 new highs versus 93 new lows. You had 52% of stocks advancing on the NYSE versus 43% declining. 33% of stocks were below their respective 50-day, and 34% of stocks were below their respective 200-day. The Dow, the Nasdaq, and the S&P basically closed flat. It was a snooze of a session other than the morning when the SPY made a lifetime high and then sneezed and descended a little bit. So congrats to the SPY longs. It made a lifetime high today. The Dow and the Nasdaq have not done that. Taking a quick look at mega cap land, it was mixed bag, I would say. So you had like Microsoft up 0.8%, Apple was down, up 0.2%, Google was up 0.8%, Meta was up 0.5%, Amazon up 1%, Nvidia down 1%. It was really a nothing burger type of day on the mega caps. If you take a look at the sectors, the leading sector today was energy. So oil is catching a bid. Consumer cyclicals right behind, up 0.62%. Industrials up 0.4%. Communication services up 0.4%. Financials up 0.4%. Where's tech? Tech was down 0.1%. Really did nothing today. So yeah, let's jump into a few topics here. So yesterday I covered 8 irrefutable warning signs for stocks. I shared 1 with the free members and 7 with the premium subscribers. But what if they're all refuted? What if the powers that be can invert the yield curve once again and we just go to lifetime highs? Someone had asked me today, where would I allocate money then? So if that happens, that's great, because you have to be able to be nimble and trade both sides. If you've been following me for a while, especially in the premium side, I go over balance area setups for the long side as well as the short side. And we have all made money on both sides of the trade this year. If you were to show me a condition where all of those signs got negated and we were going and starting a new bull market, I would certainly look at things such as Nvidia, Meta above 523, 525. I would also look at Alphabet, basically the Mag 7 types, because the breadth studies that I've been sharing with you and the fact that it's all a binary market and over 50% of the market is the Mag 7, I would then just dig deep into the Mag 7 and pick out maybe 2 or 3 of those. And I wouldn't completely sell my best defended stocks because for the premium members, they'll attest, some of these stocks have been making lifetime highs. They pay a dividend. They don't go down when the broad markets sell off, and they still go up when the broad market goes up. So it's a win-win scenario on a lot of those type of names. So I would simply spread the wealth from my best defended and cherry pick maybe 2 of the Mag 7, as well as continue to allocate funds into SLV and GLD. And that's kind of how I would look at the stock portion of my allocation, because obviously stocks are just one asset class. And keep in mind, on the way up to new lifetime highs, I would be also looking on the other side of the trade, trying to see when the VIX gets down to, hypothetically here, single digits. If the VIX goes to $9 and we're all heading to lifetime highs, those are the days that I buy bearish hedges against my longs, or core positions of a bearish stance. So that's kind of how I look at the broader scope of this. I'm usually never all long or all bearish in my portfolio. I'm always hedging the main direction where I'm leaning, because you just never know. Especially in these times where I feel when all those 8 warning signs are true, and the risk is really to the downside, and we are definitely overbought. And you see all this insider selling, not just from Jensen Huang, but from many of these corporations. They leverage these stock buybacks, stock splits, dividend announcements to sell into that during the oversold conditions. So there's nothing new on Wall Street. Only the participants are new. So that's kind of how I'm thinking about this broader term. Hey, maybe they pay off all our mortgages this week and it's a brand new bull and we go into hyperinflation, but we shall see. So let's keep peeling this onion here. So what was strong today? Let's see. AppLovin up 6.36%, Cura Sushi up 5.85%, New York Community Bank up 5%. These are all percentages. Wayfair, the furniture e-tailer, 5%. Lyft up 4.88%. K. Hovanian Home Builder, 4.7%. What was weak? DJT Partners, the Trump media company, down 6.6%. Biddy down 3.5%. Natural gas futures down 2.79%. Walmart down 2.4%, MicroStrategies down 2.4%, TZA, which is bearish, small caps down 2.3%, and SMCI down 2.16%. For free members, tomorrow's the Fed cut day. I just want to reiterate, it can be bullish or bearish, regardless if they cut 50 basis points or 25 basis points. What do I mean by that? You have to watch price reaction to the news. Let's assume they're going to cut, 50 basis points, right? 0.5%. They can spin it as, holy crap, the economy must be so bad. They see something that we don't see, and they're trying to stave off recession. That is bad news, and stocks fall. That's if they increase 50 basis points. But the flip side, the same exact action, decreased by 50 basis points, they can also spin the narrative of they have inflation under control, so they can cut 50 basis points. The Fed has tamed or killed inflation. Everything is healthy in the U.S. economy, and they have the slack to cut 50 basis points. It can go either one of these directions tomorrow. Just watch price reaction. And typically, don't trust the price action when Jerome Powell is speaking. Again, the stock market has never fell or crashed while he is singing to the microphone. It's really going to be either after he gets off the podium, or maybe Thursday or Friday, or even next week, that we'll see the actual true intention of the market. I will see you all after the Fed cuts rates after the Wednesday session. Just a quick housekeeping reminder. I did send out that email to everyone about the transparent pricing that's going to start on Thursday, September 19th. There is a discount in your inbox that you can take advantage of to lock in the current price forever. But after Thursday, the annual price will be $325 and the monthly billing will be $34, which is still basically 17% to 25% lower than the category average in Substack finance and investing. Thank you so much for your continued support and supporting the hard work that I do. I will see you all later. Premium members, we're going to go over the Dow 30 stocks today, so stick around. That's my train.
Stand clear of the closing doors, please.